Welcome to Retirement Rescue Radio, a show specifically designed to help retirees and pre-retirees maximize their financial efficiency so you can live the retirement lifestyle you've always imagined. Your host is Nate Miller, investment advisor representative and author of the CPR Retirement Rescue Roadmap. Nate discusses thoughts and ideas from some of today's most knowledgeable professionals in the field of finance. He offers strategies along the way to help you make better financial decisions so you can maximize your retirement. This is Retirement Rescue Radio.
Hey there, Retirement Rescue Radio listeners. I'm your host, Nate Miller, and we have a very special interview today. I'm excited to bring you an update. We've been working behind the scenes to design alternatives to cash, money markets, and CDs for our families. And we've been listening to our clients' concerns, and a lot of families, just like you, are holding hundreds of thousands, if not millions of dollars in cash at this time. And you can't blame yourself when you look at today's world, right? Politically, socially, economically, this is a different day, and there's a lot of ambiguity when it comes to the prospects of the stock market continuing to move up. And unfortunately, we're still dealing with COVID and the different variants involved, potential shutdowns, and we've got record low interest rates. So it's a very unique environment right now. And many people don't realize that you're still paying ordinary income tax on the interest that you're earning on those CDs and your savings accounts even each and every year. And that's even if you're reinvesting the interest. So not only does this dilute your interest earnings, but after you consider that you're paying taxes also in today's current inflationary environment, families are just losing money safely. And so if you've got CDs or savings accounts, even brokerage accounts that are yielding under 3% interest, we're very excited to bring on Jim Bowman to our podcast to introduce a new opportunity that still provides safety, principal protection, and liquidity, access to your money. It also allows our families to earn a meaningful interest rate, potentially up to 8% per year, and allows the deferring of the taxes on that interest until you actually access the money through the withdrawals. So what I want to do is have Jim take a few minutes to walk you through this brand new alternative that we're being able to offer our families in today's low interest rate environment. And to give you a little background on Jim, he is president of the life insurance department at Accel, the largest insurance marketing organization in the entire country. And he has headed up the life insurance department since Accel brought that on as an additional division of the company over a decade ago. He has also led that department from doing less than $1 million of target premium their first year to over $57 million of target premium in 2020, making them the largest life insurance wholesaler in the entire country. And Jim just might have more conversations about life insurance on a daily basis than anyone else that I know. And so I wanted to bring him on the podcast to explain this phenomenal concept. And Jim even played a large part in bringing this product to market for you, my clients and listeners, to be able to take advantage of it. And so we are truly honored to have him on our podcast today. So without further ado, here's my interview with Jim Bowman. So Retirement Rescue Radio listeners, welcome to another episode. We've got a great guest, my friend Jim Bowman. Jim, how are you?
I'm doing fantastic, Nate. Yourself?
Great. So thanks for coming aboard. We appreciate you coming on here.
My pleasure, and honored to be here. So let's go help some people.
Sounds great. Ready to rescue some retirements then?
Yes.
Awesome. So Jim, I wanted to bring you on here to talk about, some concepts and a specific product even that has been, I want to say kicking butt, especially when, the type of rate environment that we find ourselves in here. And before we get too deep into the makeup of this, as a cash alternative or a place to put money. Oh gosh, before we even get into that, I need to ask you a question. So you and I actually used to work together. You're the president of the life insurance department at Accel, and there's a lot of stuff that people could find on the internet if they wanted to. But is there anything that's unique about you that you'd like to share with my listeners to kind of help make you a little bit more human and get to know you a little better?
Sure. Living in Kansas City, pickleball has become a huge craze.
No way.
Oh yeah, it has become a huge craze, and my wife, my lovely bride, and I play a ton of pickleball, competitive pickleball. Our son is a very competitive player, and our daughter's now into playing pickleball. So that you're not going to find that anywhere. But I played 3 hours Sunday, played 2 hours last night. So I've really gotten into this, craze called pickleball. So you're not going to find that anywhere.
No.
But if you have a game, and if you need a player, give me a call. I'm in.
Got it. I've got several of my clients that play at the Rock Chalk Park here in Lawrence, and they've invited me to. I've played one time so far in my life pickleball. I didn't have any paddles. They apparently have tons of extra ones that they can always give you.
Yeah.
So something else I don't think that you're going to find is that Jim's quite the baller as well when it comes to basketball.
Well, I just love to compete. So basketball is a great area. I was told to give up the game many times because of my body, but I keep playing. And another little known fact, if you want, Nate, I've been invited to join Coach K. Yes, the famous Duke basketball coach.
Yeah.
He has a fantasy basketball camp. I've gone 6 years in a row to compete there at Duke. They treat you as a Duke student athlete. And to be honest, I'm not a big Duke fan. I've become a great fan because I've gotten to know Coach K fairly well. And it is just a blast. So I still try to play some basketball. COVID made it pretty hard because it's hard to get with people. And, I kind of liked it because no one can guard you that closely. So you get to shoot pretty unencumbered, if you will. But
right, if you can shoot the long ball.
Yeah, I can hoist it up, It's never hurts to shoot. It's good when it goes in though. So.
Yep. I know. And basketball is something that you can lose very, very quickly. I think when we played at Advisors Accel many years ago, I don't think I had played in about a decade, and I played like I hadn't played in a decade.
Well, it's like anything in life. If you don't practice, if you don't prepare, you can't be any good. And it's exactly what we're going to be talking about today. If you're not looking to prepare for your retirement, you may not have a great experience. And so that's why I was so, honored that, you reached out and said, hey, I'd like you to come, have a conversation with my group. And so it's all about being prepared. And you have to practice, and you have to be a student of the game, whether it's pickleball or basketball or retirement planning. So I'm here.
Great segue, Jim. Appreciate that. And yeah, so this particular, I guess, concept and even product that we're going to be talking about, I think plays a piece of that retirement plan, a very important piece of that retirement plan, potentially for a lot of people. And so like I was starting to go into before we went into all your sports and competition accolades there, I want to go into a little bit of background of why this product was even developed and the process of how it got developed as well. If you want to kind of touch on that for a little bit.
Sure. Well, working with people like yourselves and working with people's retirement dollars, one thing became very evident, and that is a lot of people are sitting in cash. And they're sitting in cash for multiple reasons. One is maybe they don't want to lose money, so they don't want to put it at risk. Now they don't want to tie it up into a vehicle that may have surrender charges. So, and another, I just might need it someday. I'm probably going to go to the kids, but I might need it someday. So we, especially, in the past year, we've never seen more clients sitting in cash positions than in the past. So that's great. It gives peace of mind. But what we are trying to do is, how can we provide a product that can bring real value to the client, yet still have liquidity to them when they need it? And that's really the genesis of this product that we built with United Life called Legacy Accel.
Perfect. And so how did it get built? There were a few companies, I think, involved, and really, as far as all the advisors, you guys have one of the biggest and best networks of advisors. So kind of figuring out what they were wanting to see from all of their clients, and just being able to craft a product that really fits, checks all the boxes, really.
Well, and you remember from your days here and now as a successful advisor, talking about the needs of the client. what are those needs, and how do we balance those needs with what an insurance company needs to do to offer a product, because they have to be profitable, because we are making long-term promises. You are making commitments, Nate, to your clients that you are going to provide for their retirement, and you need tools to do that. So when we talk to our advisors, actually clients as well, it's like, what are the things that are most important? And in this case, when it came to cash, it was true liquidity. So we designed a product that the insurance company could be comfortable with, and the client can get the value of more than just money sitting in a CD making 0.003, that then you get a 1099 miss at the end of the year on the little interest that you paid, that only upsets the client even more at how little they paid, and now I got to pay taxes on it. So we wanted to avoid all that. It actually has a meaningful guarantee of 2.5% that the client can expect. Mm-hmm. Now, there are charges for that. And that charge is the cost of insurance and the fees associated with that. For someone in their late 60s, 70s, that might be 1.5, 1.75. So you would still, just on cash net out 75 basis points, which is more than double what you're getting at the bank. Mm-hmm. So cash on cash alone, it's a good deal. The best part of it is the other value you get with it. And the other value is you get a legacy play. You get actual life insurance, because this, ladies and gentlemen, this is a life insurance product. Mm-hmm. Okay, so let's make no mistake, but it's because it's a life insurance product that the Internal Revenue Code allows us to give you a tax deferral on the growth. It gives you a tax-free death benefit that's going to be more than what you put into the product. God forbid you pass away. Mm-hmm. And also off of that death benefit will give you a chronic illness rider, which can offset some long-term medical expenses if you cannot do 2 of 6 of the activities of daily living. So we wanted to take a product that was a cash that's really what I like to call unemployed capital. Cash is unemployed right now because you're not making anything.
It's not working for you, right?
It's sitting on the couch eating potatoes, doing nothing for you, right? So what can we do to bring real value to your clients? And so we feel this is a real good value to the clients. And depending on what the client's goals are, will depend on how much they should or would want to put into a product like this.
Mm-hmm. Yeah. So you touched on a few things. Let me summarize that real quick, if I could. You mentioned it's got the liquidity, maybe not, ATM type liquidity. You mentioned a death benefit, chronic illness, if some kind of long-term care issue comes up. And then the minimum guarantees after the cost of insurance, but it also has some type of upside potential too with it as well, doesn't it?
Correct. So it's tied to an index that has a terrific historical view of it, a little over 8%. And depending on what that index does every year is going to get credit to the account. So if you get, 5%, let's say, you will get the less your cost of insurance. And then that example I used earlier, let's say it was 1.5. You would then net out 3.5 on that money, which, 3.5, years ago didn't sound like much. In today's environment, man, that's pretty darn good on cash. Mm-hmm. Now let's take the worst case scenario, because I think more people want to, look at that. Let's say that index credit for 3 years in a row is negative. You are not going to go negative. You will have that 2.5 guaranteed when you exit the contract. So let's say in 3 years, you put 100,000 in, it doesn't do anything. You've got your cost of insurance that you paid. When you exit that contract, the insurance company is going to true up or make good on that 2.5% less your cost of insurance. So that's a real positive. So you get that meaningful potential upside, but you've got that floor of safety net. So we really look at this as you're going to be ahead of the game if it's just sitting in cash in your mattress or in a bank account, CD, or money market.
Yeah. So that's a couple other, I guess, features then. So you've got, if somebody is sitting in cash, obviously they want to have their money safe. And so this offers
Right.
that. But they also want to have access to it. This offers that. And they want to have a little bit of growth potential. And normally if it's sitting at the bank, it's not going to have that, whether it's in money markets or CDs or you name it. It's point nothing is what one of my clients called it as far as what they're earning. Point nothing.
Oh yeah. And we're also happy about point nothing, right?
I know. Yeah. And so how much money do you think is sitting in cash right now throughout the country, whether that's just regular cash accounts or CDs? Do you have any idea in your head here about how much is sitting in there?
I've probably read so many different things about numbers, but we're talking trillions that are sitting in cash. For the reasons we talked about earlier, Nate, is like, I don't know what's going to happen. I don't know what's going to happen with the market. I don't know what's going to happen with tax rates. And I want to keep money here, whether it's to invest more down the road, or I just feel better that I have that cushion, right? So I think there's a lot of people out there, a lot of your clients that are sitting in cash positions that, if we could take that unemployed capital and find a place to work for them that they could trust and believe that it's going to give them some opportunity, I think it's a great thing for people to look at.
Absolutely. And so what could be some different scenarios that you might see of different people that would be like, what, I think this product could be perfect for me?
Well, we've seen probably the bulk of the business early has been with retirees, with people who are comfortable. Your clients who they've got their income needs set, they're good, but they're sitting on cash that they just because. So it's really been a well-received vehicle in that position. The other interesting position is actually business owners who have to have cash on hand for collateral positions, for, I'm not going to need this money. I've got to build up a pool to buy a business in 5 years. We've seen people, business owners, really find this as a good vehicle to put their cash until they're going to need it down the road. So those are kind of the two main ones that we've come across so far.
Well, absolutely. As a business owner myself, it's like, having lots of overhead. You've got employees, you've got rent, you've got your own building, you've got a mortgage, you've got marketing, you've got a lot of expenses. And so you do need to have a pretty big cash runway. And so I think a lot of us do tend to keep a lot, but we know we're not going to access all of it.
Right.
We just know that we need to have access to it. If we need it, it needs to be there. To give, I guess, round numbers, obviously we're not going to be talking specifics. We're going to be talking more generalities here. But if you've got, say, somebody that's in the mid 60s, 65 somewhat, and they put, say, $100,000 into this, if we are looking on the death benefit side, what's kind of a range that they might be able to expect as far as that death benefit goes?
That's a great question. Some of it is going to come into the health of the client, which we do need to talk about, because I want people to understand that this is a totally unique process that's not invasive underwriting like they may be used to. So we'll talk about that. But, depending on their health condition, we're probably looking at 2 times the deposit amount. I think is a nice rule of thumb there. It can be more, you can purchase more, but typically we're trying to buy as minimal amount of life insurance, because we really don't want to spend money on the cost of insurance. We're really trying to leverage this as, I want my cash, I want it to be available, but I want it working for me. So you get to sit down with the client and say, okay, what's the optimal amount? And there's illustrations that are run that can show, you and your client, okay, here's our range. What do we want to do?
And I want to touch on this for a second, because I think this is really important. You're talking about the process. Because when somebody thinks life insurance, they're thinking to themselves, oh, great, I got to get my blood drawn. I got to coordinate times with somebody to either come to my house or my business. So how does this process differ from that?
So it's a totally unique process, and it's basically you will ask your client 20 knockout questions. That's just going to say, this isn't the right thing based on your medical condition or issues. Once you get through those questions, then you'll ask just the routine medical questions. While that is going on, there is a process in this, artificial intelligent world we live in. We're using that to go through the prescriptions that the clients are on. What is their driving history? And they're going to behind the scenes be able to come up with an assessment that says, yeah, you're a preferred risk. You are better than the average American from a mortality perspective, or you're a standard risk. You are the average mortality of an American citizen. And they're going to do that in real time. And so by the time you and your client are done with those questions, 10 minutes later, you'll have an answer. And so no invasive, you don't have, like you said, no blood draw, you don't have to go tinkle in a cup, or any of that stuff. Medical records are 90% of the time not needed. There's going to be a couple of clients that have a few things in their past that the insurance company is just going to want to make sure the follow-up's being done. So we've seen people as old as 86 get covered. And I think, and they were actually, that client was a preferred risk too. They were in great health. So they were able to do this.
So basically answering a bunch of questions instead of getting pricked and tinkling.
Yeah, tinkle is a technical medical term, I'm sure.
Very technical. Yeah. And so there's the qualifications. You're answering some questions, and then simplified process. I guess you probably have to sign a HIPAA thing. So then in the background, while you're going through all the rest of the stuff, they're looking at all the stuff that you just mentioned. Modified endowment contract is really what that means. And so explain what that means to my listeners as well. And it's I just want people to know about it. In my opinion, I don't think it's a big deal, but I want to be able to explain that.
No, I think that's a great thing to highlight on this, because this is one of those things, and that's why they work with you, Nate. You get into the details because this is a detail. So a modified endowment contract came about because the Internal Revenue Code saw people investing in life insurance without any taxes having to be paid, because that's one of the beauties of the asset class of life insurance, is that these index credits can grow and grow and grow, and you never pay any taxes on it. And then you can borrow your money, the growth included, without paying any taxes. It's a long, true, great strategy that we could do another whole podcast on how to use life insurance as a retirement vehicle. That said, the Internal Revenue Code started to see some abuses. So what they said is, if you're going to do a single deposit or over 3 years, we are going to tax you like it is an annuity, which means we're not going to tax you every year on the gain, but when you withdraw your money, we're going to tax the growth, and we're going to tax it from the moment you draw it. We're not going to let you wait. So that's what a modified endowment contract says, is you get to defer your taxes on the growth, but when you liquidate the funds, you're going to pay capital gains taxes on that growth at that point in time.
Okay. So no tax on the amount that goes in, because it's an after-tax, it's funded with after-tax dollars, and you'll just pay tax on the gain.
Correct.
Perfect. But while it's in there, you're not paying any tax on that growth, which is different than a CD, because a CD, you're taxed on it every single year on that teeny tiny interest, whether you pull that out or not.
Well, and then let's look at this. If this is kind of what I'll call never money, okay, it's a client who's never going to touch it, but they want that safety, right? Yeah. Let's say you put it in there and it, for 10 years, and it grows from 100 to 125,000. I don't know what that meant. This is just a hypothetical, right? But let's say that client then dies in the 10th year. If they pulled it out while alive, they would have been taxed on that 25% gain, 25,000. However, by passing away, and let's say it's 200,000 is the death benefit, that $200,000 now goes income tax, capital gains, tax-free to the named beneficiaries. So now you've just turned 100,000 into $200,000 as a legacy. So, and there's strategies that's a great strategy for people to consider. especially if they're like, I think I'm going to need the money, but I really don't. And I'd like to leave more to my children, my grandchildren for education or just to, make their life a little quality of life easier down the road. That's a tremendous, benefit of this product.
So great legacy play too, then.
Yes.
Even though we're not using it necessarily for the death benefit, it's nice to have that death benefit there because, like you said, if you pass away, that even though it is a modified endowment contract, the death benefit still goes tax-free.
One of the things I had a client question me about this, and I just said, well, I said, you can pick any bank you want, right? And if you put 100,000 in there, and 6 months later you pass away, your beneficiaries are going to have 100,000 plus whatever is credited interest. And that credit interest will be taxable to the estate. If that bank is not going to turn that into $200,000 out of the goodness of its heart, it's just not possible. However, that's what happens. That is kind of one of the beauties of life insurance is now we've doubled that in this scenario for your beneficiaries, and it's not going to pay a dime of taxes. So a really powerful benefit. So like when I talk about putting the unemployed capital to work, that's part of what I'm talking about. That's doubling the money for the family. And that is an incredible value to be able to leave a legacy.
Perfect. And taking that business owner idea that you mentioned a little bit ago, this could even work as possible key person insurance. If you've got some extra cash sitting around, you've got somebody else that is vital to your business, putting it on their life. So if something does happen to them, the business is also going to receive a tax-free death benefit too.
Yeah, we actually had a really interesting situation. Client doing very, very well in the business, have 2 kids in the business, but needs to keep cash or liquidity for the business. And this was more for loan purposes. So what he did is he put 2 policies in place on his 2 children who are running the business as key person. And he has seen the returns on that. He will see this. These returns will give him even more cash in his business. But to your point, he's now put that capital to work in a better vehicle versus it sitting in a money market doing nothing for him.
Yep. See, we could go over the terms or the names, the nicknames that we have for that money, unemployed dollars, I think we've called it. CDs or cash accounts can be Michael Jackson accounts, right? Where they're doing the moonwalk, look like they're going forward because there's some type of interest, but you're losing purchasing power to inflation.
I like that one a lot. That's a good one, Nate.
Yeah. Any other ones that you can think of?
I also, this isn't very flattering, but I call it dead money. A lot of times this is just dead money. It's just sitting there doing nothing for you and probably isn't going to do anything till you pass away. So, that's not the best term. You might want to edit that one out, Nate.
I like the lazy money, the unemployed money.
Yeah, that's a lot better.
Well, awesome. Is anything else that you can think of with this particular product that you're seeing? Because from your standpoint, you're seeing this at a much larger scale than I am. I've got my company right here, but you work with advisors all over the country that you're seeing every single day. So is there anything else that maybe as we're wrapping up our discussion of this concept that you want to make sure that people understand?
I think we've hit all the major points. I would want to cover kind of 2 again. It's putting cash to work for you with what you want to do, but it's this process that takes the whole life insurance process away from the consumer. So, and was the other key thing. How do we make this, non-invasive? How do we make it where it's a 30-minute, decision versus, weeks and everything else? And I think that has been a real key for a lot of, advisors to say, hey, I like this process so much, and now they'll want to see it offered on other insurance company products, which we're not there yet. But those are the 2 key things.
Yeah. So we've taken life insurance from what most people think of it as a liability. It's a monthly check that I'm writing or a draft from my account or yearly, however they've got it set up, to really turning life insurance into an asset.
Right. And one of the things that I try to get our team, and you know this, you've heard me say this for years, life insurance is a different asset class. It is a unique asset class. And it's not because, Nate, you say it or I say it. It's because the Internal Revenue Code says it's a different asset class because they tax it differently.
Mm-hmm.
And they want Americans to have more life insurance because that's less pressure. God forbid, somebody can't sustain their quality of life because the major breadwinner passed away. That becomes on the government. Mm-hmm. And so that's why it enjoys such a tremendous tax, a special tax relationship with the Internal Revenue Service.
Yeah. And I feel like the insurance industry has been extremely innovative in the past couple decades, really, because life insurance has evolved quite a bit since, what we might think of our, granddad's life insurance.
Yeah, that is, that's kind of the beauty of the evolution of the products that are available to your clients today. And, again, I'm honored to work with you and help in any way. And, we'll keep trying to come up with more ideas and strategies to make life easier for all of our clients.
Yeah, well, I appreciate this, Jim, because I know that you had a hand in helping to get this developed. And I know a lot of people are going to be benefiting from this. And so if you don't mind, if you got a couple minutes real quick, I want to go through some philosophical questions here for you. So you're working with one of the, largest companies that consults financial advisors in the entire country. You work with some of the top financial advisors in the entire country. What would you say would be, I guess, some of the best maybe advice that you've ever received that's helped lead you to the success that you've had?
Oh, that's a deep question, and it's a good one. I think for me, it's understanding that it's not about me. It's understanding how can I help somebody, and I need to listen to them to understand how I might be able to help. Mm-hmm. So it's really listening and asking questions. As simple and maybe corny as that sounds, Nate. No. That's like, how can I help you? What are we trying to do? And once you get those answers, then you can start to kind of put a picture together. Mm-hmm. But then you got to ask more questions. How do we get there? What do we want to do? Are you good with this? So I've always felt that for me, especially life insurance, because it has, such a great reputation. Everybody loves talking to me at parties about life insurance.
Well, I bet. Yeah.
Yeah. Oh, it's a joy. My wife at one point in time told me to pick up a different profession, but
don't tell people you're a life insurance salesman.
Just don't do that, But I look at what I do and what I teach is we're problem solvers. Mm-hmm. And the tool I have to solve problems is life insurance. Mm-hmm. And people buy life insurance for really one of two reasons, and one of two reasons only, Nate. They love somebody as much as they love themselves or more, because they want them to have a great quality of life when I'm gone. It's what I want for my wife, what I want for my children, and hopefully someday grandchildren. Or they want to understand the Internal Revenue Code and how to play the game from a tax perspective. Because this is an asset class that's treated differently by the Internal Revenue Code than anything else out there. And when you talk about people who have real significant wealth, they own a lot of life insurance, and they own it from a legacy perspective and from a tax perspective. Mm-hmm. So to go long answer, long-winded, but at the end of the day, it's like, just be a problem solver. It's not about me, and listen, and then you might be able to help somebody.
Love those. Another one, I love to ask this one, since we are dealing mostly with people that are either in retirement or very, very close to it. And you and I seem to have the same haircut here. But you got a couple years on me at least. But how would you define retirement today?
Well, that's a good question, because I'm 58 years old and I'm trying to figure out what my next step is going to be. Mm-hmm. So when I think about retirement, I think of what do I want out of my next chapter of my life. Mm-hmm. And so I'm defining it as the next chapter. Mm-hmm. And then what I'm working for is I still love what I do. I love having an impact on people. I'm honored to be on your podcast. Hopefully I don't mess it up and you'll ask me back sometime.
Yeah, absolutely. We've got a few other topics we can talk about.
We do. But, for me, it's the next chapter. And what do I want that to look like with my much better half, Jeannie? So that's how I guess how I define it today, not being retired. It's like, what do I want that to look like? And, can I still make an impact on people even in the next chapter?
Yeah, love that. Next chapter. It gives you the impression that Jim's not done.
I'm not done.
Next chapter. Awesome. Well, Jim, I appreciate you coming on here. I know it's like you know the life insurance world inside and out. You're one of the most intelligent people in regards to that industry that I've ever met. And so I wanted to bring you on here and get your take on this and just kind of have, another perspective that can talk about this phenomenal concept and who it fits for. So
my pleasure anytime. And listen, if there's anything I can do to help, with any of your clients individually or anything, just you let me know what I can do, buddy.
Will do. Appreciate it.
Man. All right. Be well.
You take care. Bye.
Bye.
Hey there, Nate Miller here. And before you go, I just wanted to mention something here. So Jim and I talked about the qualifications for being able to even have access to this this concept, this product. And if you want to find out whether or not you can qualify for this and put some of your lazy money, unemployed money, dead money, whatever it is that you want to call it, if you want to put some of that to work for you and find out whether or not you can qualify for that simplified underwriting that we talked about, then you just need to find out whether or not you can knock out these 20 questions. And so if you can answer no to these 20 questions, then you will be able to qualify for that simplified underwriting without having to get the blood drawn, without having to tinkle in the cup and anything like that. And so if this is something that you kind of want to fast track and find out whether or not you can even get access to it, then go ahead and click on the link to be able to download that. And you'll be able to knock those out. And then if you are able to get those, reach out to us. We'll help you go through that process. It really doesn't take very long. We've done that for several of our clients, and it is really a pretty quick process. So you can start putting some of that money to work for you. That can kind of be maybe a goal for 2022 coming up here now is to get some of that lazy money that just hasn't really been doing anything for you and find a job for it, put it to work for you. So that's it. Click on the link to download that and then knock those out and then reach out to us. If you want to reach out to us, we've got a link here for our 15-minute phone call as well. So a couple different links that you guys will be able to have to download the questionnaire and then also be able to get a hold of us so that we can help you out with that. So that's it. And we look forward to helping you make 2022 your best year ever. Take care.